All right, guys, this is Paul Singh, the market speculator, with the weekly swing trade report for April 24th, 2021. Today, we're going to quickly go over the indexes, how they did during the week, look at the leading sectors and industries, a little bit of earnings, and then we will get into the top 10 stocks in each of the major indexes that we are tracking here. Now, I do these weekly reports every other week. And the weeks that I don't do them, we do Coffee with Paul. So next Saturday will be Coffee with Paul. The week after will be another weekly swing report. And of course, you guys probably know by now, we have the Bulls on Wall Street part-time swing trading service. Full bootcamp class in here, weekly swing, actually daily swing reports, alerts, and we've got the chat room here as well. All right, let's get to it. Let's look at SPY. SPY basically did, by the end of the week, a whole lot of nothing here, although it was a very volatile week. You can see all this back and forth. Started off a little shaky, pulled back, looked like it might be extended and breaking down, but held that level. Was looking pretty good, and then Thursday, the market initially reacted severely to the Biden capital gains tax talk, which I think is going to be a less of a percentage than they're saying. Goldman Sachs came out with a report where they think it's going to be less than the 38%, I think it was, that he initially said. It'll probably be somewhere in the 20s. And the market rebounded then on Friday. And basically, after all this volatility, closed about break even. You can see here with the indexes we track for the 5 days. SPY here was actually, down very, very slightly, but essentially break even here. And then if we look at the Qs, very similar. Didn't quite get up to where it was at the start of the week, but still overall healthy in that it consolidated and we're above the 9 EMA. If we look at IWM, this was probably the most constructive during the week in the sense that it started up here. We thought it was getting back on trend. Really took a dive here, was below the key major levels, which SPY and Qs didn't hit that hard, get hit that hard as IWM did, but then rebounded very nicely back up over the 50-day moving average and does look back on trend. But starting next week, I think we still should be cautious. It still has been very volatile, but I would say we can be slightly bullish here since all of the indexes handled a volatile week and are back above key support levels. All right, so essentially slightly bullish, but cautious. And wouldn't be surprised if there is more volatility next week, especially because if we look here at the big tech stocks and when they have earnings, we've basically had one of the big techs here that has had earnings. Let me show you guys the earnings dates. You can see here, Tesla on I think it's 26 would be Monday. We've got Google on Tuesday, AMD on Tuesday, Microsoft on Wednesday, then Thursday. We have Apple and Facebook. Friday, we have Amazon and Twitter. So basically, all of these here, big techs, are reporting this week. Big week for big tech, big week for the NASDAQ, big week for the market. So far, we only have one big tech that has reported, and that is Netflix. Netflix will often kind of move on its own because it's more media than pure tech plays here. So, and you can see Netflix had a very poor earnings reaction. So the first one is in, and it was a very poor earnings reaction. It has not rebounded its 200-day moving average, which we're watching closely, which Netflix almost always does. So we'll see if it does it again here. All right, let's get back to the indexes now. We'll just look at ETFs rather than the TC2000 indexes. We've got them filtered by the best performers over the last 5 days. Look at what was number one last week, VIX. That is telling us volatility is increasing. Fear maybe increasing a little bit, but it didn't make one of these huge pops here. So we'll see how that plays out. Now, Solar's here, leading ETF that I'm tracking here. And you can see that if we look at our electric stocks, which we've included Solar's here, the patterns are looking pretty good. So I'm getting, electric had been very weak. We'd said to stay away from them. Solar's, auto manufacturers, batteries, all that stuff. Here's FSEL here, bouncing off the 200-day moving average. We had been cautious and staying away from these things, but they're coming back, especially solar is leading here. Look at FSLR, back above its 50-day moving average. Look at SETG, getting right up to that level. SPWR, not quite at that level yet, but the overall pattern looks like maybe it's heading towards a continuation pattern. Tesla will be big on Monday, its earnings, but the overall pattern is looking pretty good. So this area is coming back into play. You can see here, look at Russia, Brazil, China here. These were all positive on the week, and look at like China's been the weakest, and look at it starting to bounce here off support levels. So emerging markets, and we could look at EEM, the ETF as well. I don't know if I have it in here. Let's just pull it up here. Emerging market ETF, and also look, actually stronger than China's chart. So emerging markets are in play. Usually when emerging markets are in play, oil is in play as well. And we can see that oil is very strong. I know I filled up here in San Diego. It cost me about $4.50 yesterday. And then if we look at energy here, XLE pattern is improving. Software also within tech. Software was one of the leading areas here. You can see nice pattern overall. Communications, pure tech here, all very good. Semiconductors, good. Retail, but retail related to internet, so we can call that retail and tech. Also, very strong pattern. So that was what was working. Actually, these were down a little bit on the week. Once we get below here, we were down on the week, but the patterns still look constructive. Even these areas that were lagging, constructive patterns overall. Now let's go to airlines, and we're going to talk a little earnings. Overall pattern, it's been leading 2021, but deep pullback since mid-March. We were watching earnings very closely. We talked about this in Coffee with Paul last week. Let's see what the initial earnings reactions are in airlines, because airlines are going to lead reopen stocks. And what I mean by reopen stocks, and we've got our list here of stocks that we consider reopen stocks, and that would be hotels, casinos, gaming, retail, luxury goods, restaurants, lodging, all of this leisure, all of this stuff that is going to be related to the economy opening up, to us getting vaccines and everyone getting out. So airlines are the big one, and we had 4 earnings. We were led by, or the first one was Delta. Initially, bad reactions. We talked about this. We may have talked about this in the last weekly report, but we definitely talked about it in Coffee with Paul last week. Numbers were actually pretty good, and guidance was pretty good, but the earnings reaction was bad in here. But look, we're starting to recover, and we talked about this. Let's ignore the initial reactions, or just watch the initial reactions, and then see a week or two out what trend really emerges. Is it going to be a downtrend or an uptrend? And my bias was towards uptrend, because just within the economy, all the stuff that we're seeing. So all of these had initial poor reactions. If we look at UAL, this was a big gap down, and this reported on Tuesday. But by the end of the week, it is back to where it gapped down from. Now, if this can take over the 50-day moving average, that'll be very constructive for airlines. And UAL is kind of the leader in stocks for the airlines. And then later in the week, we had Southwest. And look at how much better this chart is. LUV above the 50-day moving average and looking very healthy here. And then we also had AAL, which is American. And American looked very similar to United. It needs to get up over the 50-day moving average. But initial reactions, poor, but now bouncing back. And now we want to see, heading into next week, do we get continuation to the upside? If we do, that's going to be very good for airlines, and I would probably take an airline position. And we will also look more closely towards all of these reopen stocks, and a lot of, not just airlines, but, department stores, restaurants, industrial metals, lodging, all of this stuff in here. Okay, so that's earnings and airlines. We already talked a little bit about Netflix here. We've got a big earnings week coming up. Definitely be paying attention to that. Now let's take a look at some of these indexes and look at the leaders during the week. Let's go ahead and start with the Qs. And top 10 here. We're just going to flip through these and just see how the charts are. ISRG had earnings, and it had very good earnings. You can see the big earnings pop, and now is consolidating. Definitely a stock we're watching. TCOM is in leisure, and it's about to remount the 50-day moving average, looking pretty good. NTES, China Internet, remounting the 50-day moving average. Definitely should be on the watch list. Lulu here was looking very weak in retail, and this is a good Lulu is a good indicator since it's kind of the leading fashion leisure activity kind of retail stock. It's a good gauge of retail, and it was getting hit hard but has bounced back very nice and is up over the key moving averages now. Railroads have been very strong, which is a good sign for reopen stocks. I mean, when we think about stuff that needs to be transported, and then industrial metals, if those are doing good, obviously railroads have to move that stuff, and it is doing very well. CSX is doing well. A couple of diagnostics and research stocks looking decent. PDD was looking pretty weak here, especially retail, but is bouncing off the key moving averages. And then ASML, I've never traded this stock, but it is semiconductors. Very nice trend here. And then DXCM, not the best pattern here. But, looking through this top 10, and even going a little deeper, look at Baidu is China Internet. We've got some here, software here. Things are looking pretty good with these top 10s. I would say, about 5 or 6 of these should be on the watch list. Let's go ahead and take a look at SPY, EFX, business services. One of the things I like to do is when I'm looking at these leaders, which of, not only the stocks, but which of these industries, you'll notice a lot of similarities. Another railroad, KSU. And I think there were some merger talks between CSX and KSU. I might be wrong about that, but I think there were. Dish, we're seeing a lot of good moves in communications, and here's Dish here, very strong. Pool for leisure, this is fantastic. Earnings breakout, definitely on our earnings breakout list. Got medical devices. Banks are starting to come back, even though the big banks had some weak earnings. Reactions, the actual numbers were actually pretty good. SIVB, good earnings reaction here. And then we have computer systems with STX, very strong here. IQV, another diagnostics. And this is not an area I've been paying attention to, but when I see 3 stocks within these top 10s that I've been watching are in diagnostics and research, and here's another one, DHR, and this was an earnings breakout. Definitely, I'm thinking now I should watch this area when I start to see this. So you can see the benefits of doing this. Just quickly look at the top 10, each of the indexes. It gives you a good idea, not only a list of good stocks, but a good idea of what industries are moving. Let's move over now to small caps, and we'll start with RLX, tobacco. This is an IPO. Maybe this has bottomed out here, got hit really hard, and now has remounted the 9 EMA. EFX again, VSG, similar pattern here. You're going to find a lot of your IPOs in the small cap area. So here's another IPO'd in November, same pattern. A lot of IPOs are doing this right now. They got hit really hard and looks like they might be bottoming out. XM Software, here's another IPO, that same pattern playing out. HOG goes with the reopen theme and getting out. Camping World is another one I like. It's not in here. I'll pull that up in a second here. But HOG had great earnings. Of course, the idea that summer people are going to be getting out, buying Harley Davidsons. Let's look at Camping World and look at how strong Camping World is as well. Another good sign for reopen stocks. Skechers footwear retail, big breakout on earnings. Dish again. Net, so software, very strong here. And then finally ENPH and FSLR. Of course, solars, we already talked about these, very strong. All right, so that gives us a general good idea of what to be looking for going into the week. Obviously, we get more in depth. The Monday report, we'll have our focus list. We'll have some stocks we're looking to potentially trade. Otherwise, if you're not a member of the Swing Report, I will see you next Saturday for Coffee with Paul. Thanks for joining me, guys.